So to me, there are two solid ways to invest in the stock market. You can research and pick individual stocks, whether it be more growth oriented, value focused, or even centered around dividends. Now, the second way is to invest through an index fund or ETF. You can invest in an ETF that tracks your investing style, again, based off growth, dividends, and of course, you can also just invest in the broad S&P 500. All right, so basically there are two ways of investing: individual picks and ETF based. So I decided to see how I would have performed if I had chosen the latter. What if I, instead of investing my money in individual stocks, I would have invested that money into the S&P 500? Now, to do this little experiment, I pulled up all my transactions from my current holdings in my portfolio. I'm not including any options or stock trades that I did along the way, just to be focused more on the dividend stocks that I have and have owned for a few years now, which is also my main form of investing. This also allows for the transactions to be pretty much all buys. I only really have two stocks that I currently own that I have sold a few shares of, but the gains on those shares aren't going to really affect the results. Alright, so here are my transactions since July 2017 all the way up until now, January 2021. These are all the dividend stocks that I currently own that I have been purchasing over the past few years. And I went ahead and I took the date in which I purchased each share, the amount I paid for each share, and then the total invested amount. And as we can see here, over the past three and a half years in dividend stocks, I have invested about $44,000, and the current value of my portfolio, not accounting for cash, is about $62,000. That leaves me with a 41% gain over the past 3 years, which is honestly not too shabby. Again, this isn't including any options trades or any growth stocks that I used to own, and you can see it in my Robinhood account just so you can see how this portfolio has done over the past few years. But again, remember, the all-time return in my Robinhood is going to be a little bit higher at 46%, just because Robinhood is including the growth stocks that I used to own and the options trades that I've done over the past few years. I haven't really invested or done any options trade in a minute, and I'm probably not going to be doing that much anyway. So I just wanted to get the total return of my portfolio focused on the dividend portion, which is basically the full amount, honestly. Okay, so what would happen if I take all those days that I purchased individual stocks, and instead of throwing that money into those stocks, I would have purchased the S&P 500. Now, the way I would do that would just to be buying VOO, which is an ETF that tracks the S&P 500. So I took the ETF's daily prices since July 2017 and simulated me buying VOO with the money that I placed in individual stocks on those same days. So here are the daily prices of VOO since 2017. I put 3 scenarios to determine what price I would have purchased VOO. One is me purchasing at the day's low, basically assuming that I'm a wizard. The other one being the average price between the day's high and the day's low, which is honestly probably the more realistic one. And then the last one, just for fun, I put me purchasing at the day's high price of that particular day. And as you can see, by the end result, I would have invested the same $44,000, but the total gains were a lot lower. If we take the average scenario, me buying at the average price VOO, I would have only made a 22% return over the past 3.5 years. Now that feels really good, knowing that I kind of outperformed, not really outperformed, but did better than if I would have just purchased VOO. But there is one problem. The days I purchased my individual stocks, I was looking for a good price to buy those stocks at. And on those specific days, maybe VOO wasn't trading at a price that I would have purchased. Plus, if I were to do ETF investing, I would honestly just dollar cost average every single month and invest as consistently as possible. So I redid it. I reran the simulation, but this time dollar cost averaging into VOO. And this is what happened. It comes out to over $1,000 a month investing from mid-2017 to January 2021. And again, I did 3 different scenarios. The low is the average daily lows for the month. The average is the average high and low for the month. And then the high is the average high for that particular month. And as you can see here, we are investing the same $44,000. And over the course of these 43 months, I would have had a return investing in VOO of 28%. Now that is actually significantly better than me purchasing VOO on the specific days I bought individual stocks, but it's not quite as good as me investing in my individual stock picks, which had a 41% return. But the results still are in my favor for the most part, and it honestly feels pretty good to know that my individual picks have at least performed somewhat well over the past 3.5 years. Alright, so this isn't to prove anything about me or my investing style, it's more to show that anybody can do this. Like if you just invested in VOO every month consistently, you still would have made a solid return. And the goal is for more people to start investing, whether it be through individual stocks or through an ETF or index fund. There's no need to get complicated with mutual funds or complex trading strategies. A simple ETF will get the job done. Now, I also wanted to share this same little simulation with VUG, a Vanguard growth ETF, and QQQ, which is a more tech-focused ETF. Now, the results are actually better than mine, with VUG having a total return of 53% versus the same time period investing the same dollar cost averaging method, and QQQ also did even better than mine and VUG at 67% the total return. Now, I do want to mention that these ETFs are a little bit more concentrated. VUG has about 250 holdings and QQQ has about 100 holdings, and it's really focused on tech stocks. But still, it outperformed the VOO S&P 500 and it outperformed my portfolio. So that just goes to show that you don't even need to pick individual stocks to be successful. You could even pick different ETFs and still outperform most people that pick individual holdings. But yeah, at the end of the day, investing doesn't have to be hard, it doesn't have to be complicated, and anybody could do it. It's just a matter of investing consistently, having discipline, and investing in your investments or ETFs, and then at the end of the day, just having patience and giving your investments time to grow. The best thing I can say is just to try to block out all the noise, start investing as soon as you can, and I'm sure you're going to have very good results over a long period of time. Well, yeah, that's pretty much it. Hopefully the video was helpful, and thank you so much for watching.